Hey, good morning. This is May Valensky with Driving Markets. Driving while talking about markets. Remember, anything said in this piece is an opinion only. It's not investment advice, not financial advice. And if you make money, great. Lose money, unfortunate. That's the way it goes. Let's kick off and let's see what is driving markets today. So the big news yesterday was actually in the US, which I'm sure you're all aware of, is that the Fed raised interest rates by 50 basis points, which is not really news. It was already built in the price. It was expected. It was already indicated to the market. The market was expecting that. That was really not the news. So rates went up. The Fed rates went up between 4.5%, the target rate between 4.25% and 4.5%. Okay, so 50 basis points went up yesterday, the Fed rates in the US. FOMC then came out with a statement. So Jerome Powell spoke afterwards, and this is the main part of where the markets were looking at. He said that rates will go up in 2023 and not come down until 2024. So in other words, the whole of 2023, we're going to have high rates, not necessarily increasing rates, the FOMC. We're going to have high rates. They probably will increase rates according to them. We'll tell you in a second what I think, but according to them, they're going to increase rates, or the market's expecting rates in 2023 to be about 5.1%. Now, this is at the moment, the rates are the highest they've been in 15 years in the US. The last time the rates were at this level was in 2007, just before the financial crash, where afterwards they dropped rates to zero, more or less, and pumped in hundreds of billions of dollars into the US economy and into the banking system in order to support it and avoid a copy of the Great Depression of 1929. They've been successful to a degree because they've pumped money in over the last 10 years, since 2010 effectively, 2009, so that's 12 years, 13 years they've pumped in money. So they've been successful in avoiding a recession, and what they've done is they've set up the whole economy for inflationary growth, okay, inflationary expansion. So what's going to happen as follows, is that what you've got now a setup for inflation. Even though the numbers recently have come down on the PPI and the CPI, they've come down recently on inflation measures, there's still an undercurrent of inflation there, and Jerome Powell and the FOMC have recognized that. Now let's go on to my opinion, what's likely to happen regarding interest rates. So they've probably indicated a target rate of about 5.1% in 2023. I'm saying it's probably going to go to 7% because, again, the FOMC is behind the curve and they're underestimating where the market's at. Even though Janet Yellen, who is the vice chairman or chairperson of the Fed, stated that inflation is going to be much, much lower in 2023. She's the same person that said in February this year, 2022, that inflation is going to be under control by April 2022. So she's losing respect, but whatever the case may be, that's her opinion, that's what she stated. Now, the rising inflation and the fact that inflation is not going to go away and they're not going to lower interest rates to 2024 is going to bring around a recession for sure, because corporations and individuals are going to end up paying a lot more in finance costs to maintain either their standard of living or support their loans that they're going to have out at the moment, whether it's mortgage loans, business loans, overdrafts, etc. Those interest rates are rising. That's putting a big pressure on the household and a big pressure on corporates. And remember, when corporates borrow, they borrow in the millions or hundreds of millions or tens of millions, and there's a good reason for that, because they get, when a corporation has money in the bank, or they can use that, or they can borrow money. They go and borrow money because the loan from the bank is 100% tax deductible, and that's why you'll get big corporations like Apple, for example, that will go and borrow money as opposed to use their cash on deposit, because they can actually get it all as a tax deductible. So it's always better, as far as the corporate's concerned, to take out a loan. So that's going to cost more money going forward. What impact that's going to have on financial markets? Well, the financial markets this week, when we talk about the Dow mainly as the main bellwether of where we're at in financial markets, that touched 35,000 2 days ago before coming off, and it looks a bit toppy. But saying that, I'm calling for a year-end rally in financial markets. They're going to try and grab as much gain as possible to reduce the overall losses for 2022, because it doesn't look good on their books that 2022 was a loss. But they're going to go for as high as possible. The truth of the matter is, most shares are going to struggle. Okay, so it's just the top Dow 30 or certain shares within the Dow that are going to perform particularly well. That's on equity markets. Talking about equities, Tesla is interesting. Is that I've been calling, if you notice on my channel, I've been calling for Tesla down from 230 to 150. You know, obviously I got a lot of backlash on that, and it's now 156. So I'm quite close to my target call of 150 there, probably fall a little bit below. I did say yesterday that Tesla's probably going to fall a little bit below 150. That's just a pointer. They're struggling with their Twitter account, with their Twitter deal, and that's something that I mentioned yesterday. We won't go into that now. Looking at foreign exchange markets, interestingly enough, the dollar slightly strengthened yesterday after the FOMC came out with their statement, because it looks like interest rates will continue rising in the US. Now, I think the dollar until the end of the year is on a downward cycle. Interestingly enough, against the majors, especially the pound yesterday touched 124, just over 124. If you remember, I've been saying over and over again on this channel, but the last few weeks that is, that we're going to be touching 125 to 127 on pound dollar cable. Interesting. So I do think it's still going to go there by year end. The dollar's going to continue rallying, in my opinion, until the end of the year, and then come January, when equity markets will be sold off, you'll get the dollar strengthening again as a natural reflection, manifestation of the sell-off in the markets. So you'll have a bit more dollar strength in 2023, not necessarily against the pound, but definitely against the euro, the yen, and some other majors. Also look at interesting one, Aussie dollar. The Australian dollar has strengthened against the US dollar, and now is going to head towards resistance levels at the upper levels, and if it breaks that, then the Aussie dollar is going to go much higher. Talking about cryptos, naturally, as the market rises, as crypto is a high risk asset, so that's going to continue rising till the year end. Then Bitcoin, I've been calling Bitcoin down to 15,000. It might not get to 15,000 by the end of the year, but I know in the near future it's going to go down below 15,000. That's just my absolute gut feeling. Just be aware of that. Oil's interesting one, bouncing around the $72 level, $73 level. Let's see where it goes from here. It might pop up. It's got major support there. Again, if it breaks down below that $68 level, it's going to go all the way down to $55. Somehow I can't see OPEC allowing oil to fall too low. They're going to cut production and they're going to keep the price up there. So there's probably expect some action from OPEC in the near future. Today you've got interest rate rates decision out in the UK and in Europe, expecting a 50 basis point rise in the UK and a 50 basis point rise in Europe. It's already priced into the market, so anything above that or below that will be a surprise to the markets, and they will take action accordingly. That's more or less it. I haven't got any other particular news to tell you, or any particular market wrap. Subscribe, share with friends, etc., etc. Comment. Look forward to hearing any feedback at all. Have a good day.